some good news coming in for consumers. Oil firms have decided to cut petrol prices by 2 rupees per litre. This price cut is excluding taxes, we are told, and this is on expected lines with the global crude prices dipping a bit against the strengthening Indian rupee, putting the fuel companies in a slightly more comfortable position, and they have, it seems, decided to pass on those benefits to the consumers. Siddharth Zarabi joining us on the phone line. Siddharth, on expected lines after 2 consecutive hikes with the prices stabilizing in the international market, that benefit is being passed on to consumers.
Well, yes, in fact, not just stabilizing. From the last hike which happened on the 2nd of March, which was 1 rupees 40 paisa a litre, excluding value-added tax, what really has happened is that international prices of crude have gone down from just under $113 to the barrel to somewhere around $107.5 to the barrel. This has therefore led to a decline, and the OMCs have decided to pass this benefit on. Of course, it does also raise the question of whether there could be something that will happen on diesel or any other on kerosene, but no changes expected on that count, at least now. Under recoveries of the oil marketing companies will continue. In fact, at diesel, it is currently at 8 rupees 64 paisa to the litre, and kerosene at 33 rupees 43 paisa to the litre. And despite the recent hikes, LPG oil marketing companies tell us they continue to make under recoveries of almost 439 rupees.
Well, it was expected that diesel prices may be hiked up a notch again, but you're telling us that that is not going to change, at least for now.
As of now, that hasn't happened, and clearly there are 2 reasons for it. One, the centre's decision that was implemented some time back about pricing bulk diesel separately. So for state trading corporations, transport corporations, for the railways and other buyers like power sector, they now have to pay market-determined rates for diesel. In fact, we have seen Tamil Nadu yesterday approach the Madras High Court and get an interim ex parte order questioning and staying the government's centre's dual pricing policy. Notwithstanding that, today Oil Minister Veerappa Moily has told our channel that because this was an ex parte order, the Oil Ministry is likely to appeal that. But given that, a lot of the substantial losses that oil marketing companies were facing are being mitigated to some extent. So therefore, I think what is behind the reason for at least some hold, so to say, on diesel prices for the retail buyers is the fact that any increase in diesel feeds into inflation, and that causes other issues, including the RBI perhaps not being sensitive or willing to cut interest rates, which is something that the government would really want.